So the story for Hasbro is, the results in 25, including the fourth quarter, is really being driven by their Wizard of the Coast digital gaming segment. That segment has been growing rapidly, 45% on the year, 60%, I think, for Magic of the Gathering in the quarter. So just tremendous growth coming out of that brand, better than expected. And that unit is really going to carry the growth in 2026. The outlook for the consumer products, their toy segment, is still kind of weak. So it's really coming out of that digital gaming segment. But I think investors are pleased with the outlook there just because they're lapping very difficult comps. So to see solid growth in 26 coming out of that, it was a good surprise.
What's the competitive landscape out there? Hasbro, Mattel, others. How's that playing out?
Yeah, so we get Mattel results later today, and we'll have to see how that goes. It was a very challenging 2025, with the tariffs. We had retailers delaying the holiday orders, and that really threw a wrench into the entire year for these toy makers. Hasbro did report, a plus 7% sales growth in the fourth quarter for consumer products. That was the first quarter of growth in quite some time. They do expect toy growth in 2026, but it could be low single digits. There's a lot of headwinds. We just saw, disappointing retailer sales for December. So there's a lot of uncertainty about consumers out there and a rebound in that category. And we should hear more from Mattel. They are the dominant player in dolls. So we'll hear more later today.
Lindsay, what about tariffs? Is this something that Hasbro has figured out and it's no longer something that leaves its earnings to be kind of unreliable and they've kind of smoothed things out?
So it definitely affected the year. So about $40 million in the fourth quarter, a headwind for margin there, especially on that consumer products segment. So that margin did decline year over year, which was a disappointment. It's certainly going to be a headwind for profitability, at least in the first half, and comps will get easier in the second half. But Hasbro did note that, much of the cost savings program that they're working on and other supply chain efficiencies, they were able to offset a significant portion of that cost. So that is a good sign, but there's still a little bit of a headwind for the next 2 quarters.
I'm just looking at the FA function on the Bloomberg terminal. It gives me all the financial analysis. And boy, the operating income profit for the Wizards of the Coast and the digital segment is huge, whereas the profitability of the regular toy business, not so much. Is the company just throwing all the resources into their digital stuff? Is that the strategy?
So they have definitely been pushing for several years now to become a bigger player in that digital world, but also really to become known for that. So I would say, one of Hasbro's big brands, Monopoly, that's what many people know the company for, is that traditional Monopoly board game. But they are pushing into this world of digital games. They want to be valued as such. And I will say, they do have a digital version of Monopoly, Monopoly Go, and that has done very, very well over the past couple of years. It continues to surprise, including in the fourth quarter. So they're definitely moving in that direction. But that toy segment, consumer products, still is pretty large. It was still around 50% of revenue for 25. I do think that mix will come down over time, but it's still a big piece of their business that they can't ignore.
Lindsay, I also noticed that in this latest earnings report, they announced a $1 billion stock buyback authorization. I believe this is the first buyback since 2018. What does that signal to you?
I think that Hasbro is still working through their capital allocation priorities. They are still focused on reducing leverage. Their dividend has been flat for quite some time. So I think they're looking at different avenues now that they're in a much better financial position than they had been maybe a year or 2 ago. So I think it's just a signal that position is solidly better, and they're looking to redeploy cash in different ways that they maybe couldn't have done a year or so ago.
Again, using the PGEO function, you can see where the revenue comes from geographically for this company. And the international business, which was about 40% of the revenue, has been declining as a percentage of total revenue here. Is there a strategy there to focus on the U.S., or are they pulling back from international? What's that strategy?
Yeah, so I don't think that they're necessarily pulling back from international. Toys is a global business. I think a lot of that is reflecting the growth in Wizards of the Coast and the digital gaming. So the digital gaming, it's really picking up very quickly in the US. They're seeing a lot of growth there, and that's partly shifting that geographical concentration. That digital gaming business is a global business, so some of that shift might move back the reverse over time. But I think the near-term shift is just part of that growth on the digital gaming side.